I think the lesson here is that the circuit breakers probably exacerbated a lot of fear in the market.
Alaistair, Happy New Year. Welcome back to Dukascopy TV. It's a pleasure to receive you again.
Hi Natalie, glad to be here.
Thank you so much. Okay, so let's start on this China data haul that we had this week. Now, GDP roundabout hit estimates. However, some of the key concerns were around some of the other data that we did have come out. How would you perhaps characterize the Chinese economy at present?
I think broadly speaking that the economy is still on a decelerating path. If you look at the range of indicators that were released, fixed investment, industrial production, even exports and imports, I think it's fair to say that the economy is growing below its potential. And I think the government has room to ease if necessary, but I think they're not doing so because of fear of restarting the housing bubble. So I think for 2016, we're looking for something similar to 2015, which is another period of steady, quite boring sort of deceleration.
Now, one of the concerns that we did have regarding this data haul was that if GDP came in weaker, it could prompt the PBOC to devaluate the yuan even more so. How does the PBOC kind of move forward from this? What is the next step for the central bank?
Well, the PBOC tends to be quite reactive to events. So I think if they had their way, they'd sort of hold the yuan quite stable and that they'd sort of leave it alone. I think the issue is that there is a lot of external pressure in the form of capital outflows. So just for the second half of 2015, for instance, we estimate about $100 billion left the economy every month. If that continues, I think the PBOC might have to contemplate some stronger measures, like possibly a sharper devaluation of the yuan. But absent that, I think they're going to want to keep the yuan as stable as possible.
So at what point then can they start sort of taking their foot off the gas and kind of step back from that currency fix?
We don't see them stepping back for the foreseeable future. I mean, just looking at early January, for instance, the sort of stock market volatility most likely contributed to stronger outflows. So I think the PBOC would have had to intervene quite heavily so far this year, and we don't see that changing. I think that conditions are going to be quite fragile still, and so the PBOC is going to have to monitor and manage the markets and the yuan quite closely for early 2016 at least.
You touched there on that share market volatility that we've seen, and the central regulator removed those controversial circuit breakers. Would you agree that they were in fact exacerbating those stock market losses? Was it the right move to remove those measures?
Yeah, I think the policymakers probably had a pretty tough job trying to micromanage the stock market and financial markets in general. I think the lesson here is that the circuit breakers probably exacerbated a lot of fear in the market. I think removing those circuit breakers and stepping away from the markets probably would reduce volatility. I think it'll reduce the sort of risk in investors' minds about, or the uncertainty at least in investors' minds about what the government will do or won't do. And so I think that looking ahead, I think that'll be a positive for the stock market.
Alaistair, many thanks for the update.
Thanks, Natalie.
I've no doubt we'll be catching up with Alaistair Chan later in the year to see what further chapters this China story may hold. I'm Natalie MacDonald. You've been watching Sydney Direct on Dukascopy TV. It is goodbye for now.